The $5,000 QuickBooks mistake 90% of small businesses make, and how to fix it. I got a frantic call from Sarah, a restaurant owner. She said, I think I owe the IRS $5,000 I don't actually have. Turns out she'd been making the same QuickBooks mistake that 9 out of 10 small businesses make. By the end of this video, you'll know exactly what that mistake is and how to avoid it. But first, let me tell you why this matters so much. This isn't just about Sarah. In the past year alone, I've helped over 20 different business owners who made the exact same mistake. The total cost to all of them? Over $47,000 in unnecessary taxes, penalties, and accounting fees. Every single penny of that was preventable. Hi, I'm Bev from bookkeepingcoach.net, and I've seen this disaster more times than I can count. Here's what happened to Sarah, and I guarantee you'll recognize parts of her story. Sarah owns a successful restaurant and has been in business for about 3 years, making good money, and she thought her books were in great shape. Every month, she'd log into QuickBooks, categorize her transactions, and everything looked neat and tidy. Her profit and loss report showed consistent profits, her bank account was reconciled, at least she thought it was, and her transactions were all categorized. But here's what I discovered when I looked under the hood. Sarah had been mixing her personal and business expenses in the same accounts for the past 2 years. Her business meals were coded as office supplies, her personal grocery runs were showing up as meals and entertainment, and her kids' school supplies somehow became advertising. Now, you might think, well, it's not too bad, right? At least everything was categorized. Wrong. Dead wrong. The IRS audited her and they disallowed $23,000 in business deductions because she couldn't prove they were actually business expenses. That $5,000 tax bill, that's what she ended up owing after I helped her sort through everything and we were able to salvage some of the legitimate deductions. But the real kick, Sarah had no idea she was doing anything wrong. In fact, she was proud of how organized her QuickBooks looked. Now, Sarah isn't stupid. She's running a successful restaurant, managing 12 employees, dealing with suppliers, customers, health inspectors. She's got a lot on her plate. But here's what no one tells you about QuickBooks. It's designed to be easy to use, but it's not designed to keep you out of trouble. The biggest mistake? Using the same bank account or credit card for personal and business expenses, then trying to sort it out later in QuickBooks. I see this in 90% of small business books I review. And let me tell you exactly why this happens. Picture this. You're out running errands for your business. You stop at Fist Depot to buy printer paper. That's a legitimate business expense. Then you grab lunch at McDonald's with your kids. That one's personal. Then you get gas for your car that you use for both business and personal trips. All 3 charges hit your business credit card. Most people handle this in one of 2 ways. Either they ignore it and hope it sorts itself out, or they try to split things up later when they're doing their QuickBooks. Both approaches are disasters waiting to happen. Here's what I found in Sarah's books. A $47 charge at Target was coded to office supplies, which sounds reasonable, right? Except I dug deeper and found it was $12 for office supplies and $35 for her daughter's school project. A $23 charge at McDonald's coded as meals and entertainment. The problem? It was a Saturday afternoon meal with her family, not a business meeting. QuickBooks doesn't know the difference. It just records what you tell it. If you tell it that $47 Target charge is office supplies, it believes you. If you tell it the McDonald's charge is business entertainment, it accepts it. The software has no way to know that half of one transaction was personal and the other half was business. Here's what this mistake actually costs you. And I'm going to be specific because I want you to understand just how expensive this seemingly innocent mistake can be. First is the audit risk. Mixed expenses are a red flag for the IRS. When an auditor sees personal expenses claimed as business deductions, they don't just disallow those specific items, they start questioning everything. Sarah's audit took 8 months and covered 3 years of tax returns. Even legitimate expenses got scrutinized. Second is lost deductions. Here's the cruel irony. When you mix personal and business expenses, you actually end up losing legitimate business deductions. Why? Because when you can't prove something is 100% business, the IRS disallows the entire amount. Sarah lost $8,000 in legitimate business meal deductions because she couldn't separate them from her personal meals. Third is professional fees. Your accountant charges $150 to $300 per hour to untangle this mess. Sarah's cleanup took me 10 hours. At my rate, that would have been $1,000 just in cleanup fees. And that doesn't include the time her tax preparer needed to sort through everything. Fourth is your time. Sarah spent over 30 hours gathering receipts, trying to remember what each expense was for, and explaining to the IRS why certain charges should be business expenses. That's nearly a full work week she could have spent running and improving her restaurant. Fifth is stress and sleep. This isn't just about money. Sarah told me she wasn't sleeping for weeks during the audit. She was constantly worried about getting more notices from the IRS. The stress affected her health, her family relationships, her ability to focus on her business. Let me put this into perspective. For Sarah's relatively small restaurant, this mistake cost her $5,000 in additional taxes, $1,000 in accounting fees, $800 in IRS penalties, and 30 hours of her time. If you value her time at $50 an hour, which is low for a successful business owner, that's another $1,500. The total cost, $8,300, all for a mistake that could have been prevented with about 15 minutes of proper setup. Here's how you fix it, and I'm going to give you the exact steps I use with all my clients. First, separate everything. Have separate bank accounts and credit cards for business and personal expenses. I know this sounds obvious, but you would be amazed how many people resist this. They say, but it's convenient to use one card, or I don't want to carry multiple cards. Trust me, the convenience isn't worth the risk. If you absolutely need to use business money for personal expenses, and sometimes you do, especially in the early days of your business, here's the right way to handle it. First, transfer the money from your business account to your personal bank account and record it as an owner draw in QuickBooks. Then, use the money from your personal accounts. This creates a clean paper trail and clearly separates business and personal use. Second, your bank feeds should be clean. Business account is for business only. If you accidentally use a business credit card for personal stuff, and it happens to everyone, record it as an owner draw immediately. Don't wait until month end. Handle it the same day you realize it. Third, reconcile monthly. This is when you catch the mistakes before they become disasters. Reconciliation isn't just about making your QuickBooks balance match your bank statement. It's about reviewing every single transaction and making sure it belongs in your business books. It helps you identify if you are missing expenses or revenue as well as ensuring you have not duplicated anything. Here's what I tell all my clients. Think of your business books like your personal checkbook, but with much higher stakes. You wouldn't randomly categorize things in your personal budget, would you? You wouldn't put your mortgage payment under entertainment expenses, right? Treat your business books with the same attention to detail. Look, I get it. You didn't start your business to become a bookkeeper. You want to focus on what you do best, serving your customers, creating products, and building your dream. But here's the thing. Fixing Sarah's books took me 10 hours because I know what to look for, and I have systems for cleaning up these messes. It would have taken her 30 hours plus, and she still probably wouldn't have caught everything. I also understand that when you're starting out, money is tight. The idea of having multiple bank accounts with minimum balances or paying for separate credit cards feels like an unnecessary expense. But let me put this in perspective. Most business bank accounts have no monthly fees if you maintain a $500 to $1,000 minimum balance. Most credit cards have no annual fee. We're talking about maybe $50 in bank fees per year to protect yourself from a $5,000 mistake. That's exactly why I created my QuickBooks course and coaching programs. It's not about making you into an accountant. It's about giving you the minimum viable knowledge to keep yourself out of trouble so you can focus on what you love about your business. Here's what I want you to do right now. Go into your QuickBooks account. Look at your chart of accounts and your profit and loss. If you have any account that has both business and personal expenses, you've got Sarah's problem. Now you have 3 ways to fix this. If you're a small business owner or new bookkeeper who wants to master QuickBooks yourself, my QBO Mastery course has over 100 short videos that are 2 to 5 minutes each that walk you through exactly how to set this up properly. No fluff, just step-by-step instructions. If you're a new bookkeeper looking to build your skills and confidence, join my group coaching for new bookkeepers. We meet bi-weekly to tackle real QuickBooks challenges and build your expertise. If you're a business owner who wants ongoing support while you learn, my group coaching for business owners gives you direct access to me and other entrepreneurs solving the same problems. We meet bi-weekly to help address your specific issues. You send your issue to me ahead of the call, and we will review the correction on the call so everybody can learn from each other. All the links are in the description below. Don't wait until you get an IRS notice to fix this. And if you want to see the other 4 mistakes that can cost you even more, make sure you subscribe and hit the notification bell. Trust me, mistake number 3 in my next video will shock you.